and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is BTS, that's Behind the Scenes, a show where we share a sneak peek into the latest edition of the Business Today magazine with all our viewers. This latest edition, viewers, focuses on the big GST 2.0 reforms which have been announced by the government and are set to be in effect starting September 22nd. And this is the one edition that you will need to know everything that you want to know about the next generation GST reforms that are set to impact the consumers like you and me, economy as well as the stock markets at large. Joining in on this very edition with me are my colleague Surbhi, the economy editor for Business Today magazine. We also have Krishna Gopalan, the executive editor of Business Today magazine, and they are both here to share with us some of the key stories that you need to focus on in this specific issue as well. Let's start off with Surbhi. Because you've covered the all-important GST, news. You've been covering that for the magazine through every announcement and through every buzz that went around before the announcements came in as well. First up, help us understand. When we talk about the GST rate cuts that are slated to take place starting September 22nd, how is it going to impact the consumption at this point in time that's been on top of the radar of this government?
Hi, Sakshi. Thank you for having me on the show. Yes, the GST cuts have been very exciting ever since the Prime Minister announced it in his Independence Day speech. It's just been backward counting. As we all know, rates have been cut on a lot of items, and now we basically have two main rates of 5% and 18%, along with a 40% rate on certain sin and luxury items. The expectation, like the government has been saying, is that since items become more affordable, consumers will start spending more, and even if perhaps they have a little bit more money, they can buy additional items in their from their monthly budget. When we talk to car showrooms, etc., dealerships, they say that inquiries have increased significantly given that, cars are going to become cheaper by a few thousand rupees. And even FMCG with Navratri coming up, everyone saves to buy FMCG goods. So that's certainly all this is going to give some kind of a boost to the economy. However, we must also realize that a lot of items are price inelastic, say for items like biscuits or ghee or soaps, toilet soaps, where the rates have been brought down as well. So no matter what the item price is, you'll only buy as much as is required, and it's not like you'll start buying more just because the price is down. That's what economists are saying. However, overall, the expectation is that it could give as much as a 1 lakh crore to rupees 2 lakh crore boost to the economy if it all goes to plan. In the past, we've seen, the income tax rate cut, which has had, the jury still out on it, and repo rate cuts have happened, where again, you have to see how it plays out. So, yes, it's positive, but we
Absolutely.
have to see.
We'll have to see, but 1 to 2 lakh crore rupees of an overall impact to the economy is what we are given to understand. But Surbhi, very importantly, a lot of us do believe that yes, there will be a lot of consumer demand because of the prices that will be brought down. But what is the impact on the ground, and with the manufacturers also losing a lot with respect to input tax credit? A lot of questions are hovering around as to whether these companies will be pressured to increase prices to make up some of the costs that they will have to incur on account of the loss of input tax credit. What happens then?
So as of now, the government, the CBIC, it's asked its officials to track prices of 54 items from automobiles to paneer, ghee, butter, cheese, stationery over the next 6 months and ensure that pre-GST and post-GST rate cut prices remain there's some reduction and rate cut benefits go on. But inverted duty structure is becoming a big problem for companies, especially in sectors, be it insurance or even stationery companies are saying, notebook manufacturers, that this has to be looked into. Some FMCG companies like biscuit manufacturers, etc., they're looking at increasing the grammage for products rather than doing a price cut. So this would be the opposite of a shrinkflation. So industry is working through things. Government is working with them to try and clarify doubts as and where possible. So from September 22nd, it's expected that at least prices of the bigger items will start coming down, and as and when the new inventory comes in, that would see a massive reduction in prices as well.
Okay, so we keep an eye out on that, and of course, viewers, you will get to know about all the other details that you should find out about as to whether these GST cuts will be able to cushion the economy from some of the external shocks like tariffs, etc. Will be something that you will also get to see in the story written by Surbhi there. Let me come to Krishna now. Krishna, you're talking about the biggest announcement that came in from Reliance Industries' recent AGM, and that was on account of the Jio IPO. We've been waiting, year after year for this announcement to finally come in, and now we do know that first half of 2026, nearly a decade after storming into India's telecom landscape and rewriting the rules of the game completely, Reliance Jio is going to be gearing up for probably the biggest ever IPO in India's history. What is it that we are expecting?
Uh, an IPO from Reliance is obviously eagerly awaited, Sakshi. And the last time we had one was way back in 2006 when the erstwhile Reliance Petroleum went public. A couple of years later, that merged into RIL. The trigger, I think more importantly, has been the number of big ticket investors in Geo platforms, as the company is called. It includes the likes of Meta, Google, KKR, and a whole host of other people. So, in all, they've raised about $20 billion. It has to be an exit route for some of these investors because they typically would come to the end of the fund cycle. More importantly, the way Reliance has repositioned the offering has been remarkable. As you rightly said, starting off from a pure mobile offering to now getting into broadband and the entire tech play. It's probably more appropriate to call it a tech company more than anything else. So the likes of which we haven't really encountered in the market so far. The valuation promises to be super interesting. It's hard to find listed peers with a model that's similar to what Geo does. We have companies which do a little bit of everything, but to find everything under the same roof is mighty interesting. Analysts have pegged the valuation anything upwards of $130 billion. So even if they decide to let go of, let's say, 4 or 5% of that, it's a sizable amount. I'd just like to mention one point here, not entirely surprising though, the fact that this is easily going to be the largest IPO in the history of the capital markets, getting past the likes of Hyundai or Coal India. So to say interesting is only putting it mildly.
Okay, fair point. Well, thank you so much, Krishna, and thank you so much, Surbhi, for sharing such wonderful insights with all our viewers. I'm sure this is going to be exciting enough for all our viewers to go out there and grab your copies out there, because this is one edition that you must have, in case you really want to know, something that's happening on the economy scale, big reforms after many, many years now that's coming in, that's going to be changing completely the way you and I pay indirect taxes, and of course, what's happening, like Krishna also pointed out, the first IPO from Reliance Industries stable after 2006, and that's going to be a big one as well. Thank you so much. I hope you all enjoyed the conversation as much as I did. Do stay tuned on to Business Today Television for much more that's coming on your screens.